Now I'm going to show a trade in an example. We let Scout analyze the selected pairs and he did what he was meant to do and threw out a bunch of results. How do we proceed? How do we look for that trade that is good? My system is to trade using the H pattern. Why? Because I have more confirmation. Scout will find an H-shaped structure that already has confirmation that it's suitable for trading, and then I will use RSI indicators to ask for confirmation that it's a good opportunity to trade. Of course, there is no system that is 100% successful because if it existed, then there would be no stock exchange, but this system brings a large percentage of good trades. Let's go further. If we want to trade on the spot, then that means we exclude the results that are on the green button, because such trades require you to trade using the margin on the short side. If we look before we start doing anything, we have shown a lot of results here. All these results met the criteria for the structure of candles. In order to narrow down this list to a reasonable number of currency pairs that are best for trading, we are doing exactly what I just said. Exclude all results based on the L template. You can see that the number of results has greatly decreased. Then we turned off the green button and thus again narrowed the number of results, but it is still quite large for manual analysis. Then comes this light brown filter, which is actually a filter for the number of candles per segment in the H template. We write that we want at least 5 candles in each of the segments and turn on the filter to work. The number of couples decreased again. The final step is to turn on the RSI filter, which will leave us only results that have an RSI indicator of less than 30 and more than 70. You see, we are from that huge number of pairs. I think there were over 1,000 in the beginning, but now there are only 12 pairs and all of them represent a good trade. First on the list is the USDT pair. Let's study it. First we look at what the H pattern is. We see that there are 18 candles in the A segment, which is great, then 5 candles in the B segment, which is nothing special but it's okay, and finally 8 candles in the C segment, which is quite good. According to these numbers, we conclude that this can be traded and we go further in the analysis. The price drop during the A segment was 1.94%. That fall took place in 90 minutes. How do I know that? I see that the time frame on which this result is 5 minutes. You see that in this column TF. Then I see that there are 18 candles in the A segment. This means that the fall took place in those 18 candles for 5 minutes, which is 90 minutes. That fall is quite good for us. Further, we see that the decline continued in the C segment as well. We see this again in the TF column, this second number showing 2.71%. These are good parameters, and now we have to look at what RSI is like. In the last column we see the RSI showing 27.5. That number means that at the end of the C segment, this currency pair entered the oversell zone and is probably good for buying. When we have done the analysis like this, then we are going to see what it looks like on the graph. Clicking on the TV button will take us to the tradingview.com platform on our currency pair in that very time range, and it is up to us to find the time when the H pattern starts and ends. At the end of the C segment we need to see one green candle to finish, and then we enter the trade. We see the graph, place ourselves at the point where the H pattern started, and follow the graph. We should notice that the previous part of the graphics is in the bearish trend, which means that we are now doing scalping. That is, we will go against the trend, which is not an ideal variant, but we will do that because parameters are in a good position. We look and find the end of the C segment. After the end, we let one green candle end, and when we see another green candle moving, we enter the trade. Let's keep the trade going until the first red candle starts. Someone closes as soon as he sees that the red candle is moving and thus takes the immediate gain, but he risks that red candle turning green and thus missing a bigger gain, and someone closes at the end of the red candle. It depends more on the character of the person who trades and less on the knowledge. I will let the first red candle close here, and that was a less unfavorable case in the trade played like this. Now it remains for us to see if we made any profit and how much it was. We entered here at 37.27 and exited here at 37.48. That is a gain of 0.57% within 6 candles of 5 minutes, which means 30 minutes. When 0.075% is subtracted twice out of 0.57%, and that 0.15% is the Binance fee, we get that the net gain was 0.42%. This is some of the most standard trade. Nothing special. You can have at least 20 such trades within 24 hours, and it is in these numbers that the power of this approach lies. So, we trade with very low risk. This strategy provides a good number of entries every day, both when the market is growing and when it is falling. If it happens that we entered a trade very well and that the profit is much higher, it is only a bonus, but this strategy does not depend on top trades, but on constant systematic repetition, so to speak, of ordinary small trades. It is up to you to trade persistently. If you are not confident in yourself, you do not have to invest money, but constantly practice and write your results and at the end of the day collect the gains and losses. Our tests show that everyone who sticks to this strategy has a profit of at least 2% per day. Don't let this percentage discourage you. 2% a day is a very big profit. On a monthly basis, this amounts to a fantastic 81% profit if you trade every day. I wish you happy trading and let Scout be with you.